All right, ready to dive in.
Mm-hmm.
Today we're taking a deep look at Hinduja Global Solutions.
HGS.
HGS, exactly.
Yeah.
We're going to really break down their financials, figure out where they stand, and maybe, just maybe,
Let's see into the future a little bit.
see where they might be headed. Yeah. So we've got a bunch of stuff to look at. We've got their reports for the fiscal year ending March 31st, 2024.
We do.
And then we also have their very recent, hot off the presses, Q1 FY 2025 earnings release.
Mm-hmm.
And to add a little extra something to that.
A little spice.
Some spice, yeah. We've got some stock analysis from screener.com.
Yeah, you know what's really cool about this? It's not just like looking at a single number or at a single point in time. We've got this whole timeline, right?
Yeah.
We can see how they did over the past year, how they're doing right now, and then get a sense of how the market perceives them.
It's like a financial crystal ball.
Yeah, exactly,
Yeah.
without the smoke and mirrors.
Yeah, exactly. A little less smoke and mirrors.
Right.
So, okay, before we get lost in the numbers, let's take a step back for a second. What is HGS? For those who might not be familiar, what do they do?
Well, they're a global company, and they're all about customer experience,
Okay.
what we like to call CX
PX.
and media. And they're actually part of this massive group called the Hinduja Group,
Yeah, big group.
multi-billion-dollar empire, actually.
Wow. Okay.
So they've got two main branches to their business. Business process management,
Okay.
which is basically about making sure those customer interactions that we all have with businesses are as good as they can be, optimizing them.
Yeah, makes sense.
And then they've got digital media, where they operate under NXT Digital, their brand.
Gotcha.
So yeah, you can think of them as like a tech expert for customer service and a big player in the media world at the same time.
Okay, they're not a one-trick pony.
No, not at all.
All right, well, let's get to the money.
All right.
Their fiscal year 2024, which ended on March 31st, 2024, at first glance.
Yeah.
Pretty impressive.
Yeah. On the surface, they had a really strong year, and they definitely made profitability a priority.
Mm-hmm.
Their operating revenue, all the money they brought in from their main operations, grew by 2.5% compared to the year before.
Not bad.
Not bad, right? And this put them at over 4,615 crore rupees, which is about 614.5 million US dollars.
Okay, I see that, but what's really jumping out at me here is this operating EBITDA,
Yeah.
up by almost 46% year over year.
Yeah, that's huge.
So for those who don't speak fluent financial jargon, what does that really tell us?
Basically, it's a way to see how much profit they're making from their core business before you factor in things like interest and taxes,
Okay.
and a jump that big.
Yeah,
Investors love to see that kind of efficiency.
yeah. It definitely seems like they're doing something right.
Right.
And speaking of doing right by people, they paid out a dividend of 7 rupees per share.
That's right.
So it seems like things were, coming up roses for HGS at the end of that fiscal year.
Yes, but
There's always a but, isn't there?
there's always a but.
It's
We always have to look at the bigger picture.
That's true.
And one big thing happened that year that we can't forget about.
Okay, what's that?
They sold off their healthcare services business.
Right, the divestiture, which we know they made a profit from.
They did.
And that gets added to their overall numbers.
Right.
So how should we be thinking about that sale when we're trying to look at their, overall performance?
That's where things get a little tricky, because selling off a part of your business, even if it's profitable, can make comparing things year over year. A little like comparing apples and oranges.
Yeah, you're not really looking at the same company anymore.
Exactly. So we need to keep that divestiture in mind.
Okay, fair enough.
Yeah.
So speaking of moving forward, let's look at Q1 of fiscal year 2025. So that's the 3 months ending June 30th, 2024.
Okay.
And here's where things get interesting.
Right.
Because both their total income and their revenue from operations actually went down a bit compared to the same time last year.
Interesting.
Which doesn't really, fit with the super positive picture we were just looking at for FY 2024.
Right.
So what's the deal? What's going on there?
Well, HGS says it's due to some external factors and some one-time expenses.
Okay.
But we need to dig a little deeper, right? Their earnings release mentions the global economic roller coaster that we've all been on,
Uh-huh.
and some clients may be being a little hesitant to spend.
So are they basically saying it's not us, it's the world?
That's kind of the gist of it, yeah.
Okay.
But even with this dip, their net cash and treasury surplus, you can think of it as their financial safety net, that actually kept growing.
Mm-hmm.
And it hit over 5,177 crore rupees by the end of June.
Okay.
So that tells me they're still in a pretty strong financial position overall. They're not exactly struggling.
Okay, so kind of a mixed bag for Q1.
Yeah, I would say so.
Some good, some not so good, and a whole lot of questions.
Definitely.
But before we get to your expert analysis, I want to go through a few specific things that really jumped out at me when I was looking at these reports.
Okay.
Because there were some interesting details in there, and I want to get your take on them. First one, they sold off their optical fiber assets in the last quarter of FY 2024.
Mm-hmm.
And that led to a pretty big, what they're calling a one-time gain,
Right.
which they've just kind of lumped into other income.
Right.
So how do we think about that when we're looking at their overall picture?
Yeah, you got to be careful with those one-time gains because they can really inflate the picture and make it hard to compare things over time.
Okay.
It's like getting a bonus at work.
Okay.
It's great for the moment, but doesn't mean you're going to get it every year.
Right. It's not built in.
Right.
Yeah.
Exactly.
Yeah.
So we got to factor that into our analysis.
All right. So we've got this one-time gain. It kind of makes things messy
Yeah.
when we're trying to get a clear picture.
Okay.
What else is kind of like jumping out at you from these reports?
Well, there's that income tax survey from December of 2023.
Uh-huh.
Now, HGS says they didn't have to make any changes to their financials because of it.
Okay.
But, it does make you wonder a little bit.
That kind of tension can make investors nervous.
Exactly.
Anything else in there?
Well, we can't forget about the big one, right? The divestiture of their healthcare services business.
Right.
We talked about this earlier, but
Yeah.
they reported a pretty big profit from discontinued operations in Q1 of FY 2025.
Okay.
And that's because of an extra payment they got. This
Mhm.
seems like a pretty important piece of the puzzle.
Yeah, I mean, we're talking a significant chunk of change here.
Right.
What's the story with that? Was this always part of the deal, or did something unexpected happen?
That's the million-dollar question, and unfortunately, the reports don't really give us all the details.
Okay.
But it does make you think, right?
It does. It does. So let's see if we can piece this together a little bit.
Right.
First of all, do we even know how much this payment was?
Yeah, their Q1 FY 2025 earnings release says they got this additional payment towards the sale of the healthcare business.
Okay.
And it resulted in a net profit of 218.5 crore rupees. And that's all shown under profits from discontinued operations.
Okay, so we know how much it was, but
Right.
why?
Why, right.
Was it planned for or a total surprise?
They don't come right out and say it was unexpected.
Okay.
But typically, when companies sell off a part of their business,
Mm-hmm.
they announce the terms of the deal, including the price.
Right.
And if this extra payment had been part of that original agreement,
Right.
it would have been factored into their projections from the very beginning.
So the fact that they're reporting it as an additional payment in Q1, that means...
They kind of suggest that maybe it was triggered by something that happened after the initial sale.
Oh, okay. Okay, so like almost a bonus payment for
yeah.
exceeding expectations.
Exactly. Or it could be that there were some loose ends to tie up after that initial sale.
Okay.
Maybe some assets or liabilities that needed to be sorted out, and that resulted in this extra payment.
Okay, so we've got a couple of possible explanations.
Yeah.
But without more information from HGS, it's really hard to say for sure.
That's true. But here's the important thing. This unexpected gain gives them a nice cash injection,
Okay.
and that gives them more flexibility to make strategic decisions.
So it's not just about where the money came from.
Right.
It's what they're going to do with it.
Exactly. And this is where things get really interesting, right?
Okay.
We got to put on our strategist hats and think about how this unexpected cash might influence their decisions.
All right, let's brainstorm. What are the options?
Well, they could just plow that money right back into their core businesses, especially those areas where they're already seeing growth. Their tech-enabled CX offerings and their digital media ventures.
Okay, that makes sense. I mean, they've been talking a lot about expanding in those areas.
Exactly.
So it would make sense to use this extra cash to kind of fuel that growth.
It would. They could accelerate their investments in things like cybersecurity, develop even more of those AI and ML-driven tools, maybe even go shopping for some strategic acquisitions to get a bigger piece of the market.
So this windfall could be what they need to make a splash.
That's right. And their Q1 FY 2025 earnings release talked about how there's this growing demand for those tech-enabled CX services, especially in places like telecom and the public sector.
So they're already riding a wave. This could help them catch an even bigger one.
Exactly. But reinvesting in growth isn't their only option, right?
What else could they do?
They could decide to play a little safer and use this money to strengthen their overall financial position.
Okay, so instead of spending it on growth, they could use it to kind of like shore up their defenses.
Exactly.
What would that look like?
Well, they could use some of it to pay down some of their debt.
Okay.
That would reduce their financial obligations. and also improve their creditworthiness.
So it's like paying off your credit card to improve your credit score.
That's a great analogy. It makes you look more attractive to lenders and investors.
Gotcha.
Or they could beef up their cash reserves.
Okay, build that financial cushion.
Yeah, give them a safety net if the economy takes a turn for the worse.
So being prepared for a rainy day.
Exactly. It's about strategic financial management.
Okay.
They need to balance those growth ambitions with being prudent.
Okay, so option 1, reinvest in growth.
Mm-hmm.
Option 2, strengthen their financial position.
Right.
Any other possibilities?
Well, there's always the option of sharing the wealth with their shareholders.
Okay.
They could issue a special dividend or buy back some of their own shares.
Give back to the people who invested in them.
Exactly. And it can be a good way to boost investor confidence and increase the value of their stock.
Makes sense.
But remember, they already paid a dividend of 7 rupees per share for FY 2024.
Right.
So, no guarantees they'd want to do another one so soon.
All right, so a few different paths they could take.
Right.
Fuel growth, build a fortress, or with the shareholders. It's like they're at a financial crossroads.
Exactly. And without more guidance from HGS, it's impossible to know which path they'll choose.
Right.
But we've identified the key factors they'll be considering, and that's what makes this so interesting. It's like watching a business case study unfold in real time.
This is a very exciting deep dive.
It is.
What's next? What else are we looking at?
So now that we've explored this mystery of the payment and how they might use it, let's look at the bigger picture. Let's look at their growth prospects and examine their strategic initiatives, their competitive landscape, and those potential roadblocks they might run into.
We've got a lot to unpack.
We do.
But we'll be back in a flash to do just that. Okay, so we're back, and now it's time to look ahead, talk about growth, the future.
Yeah, we've dug into their past performance, looked at all those interesting details in the financials, but now, where are they headed? What are they trying to do?
Mm-hmm.
And what might get in their way?
A lot to unpack.
Yeah, definitely.
So let's start with their core businesses, those two main areas. Tech-enabled CX and digital media.
Right.
What's driving their growth in CX? What are they doing there?
Well, it's really their focus on technology.
Okay.
It's not your typical call center anymore. They're using AI, automation, analytics, all those cool tools to create these really smooth, personalized customer experiences that people expect these days.
Yeah.
It's not just about answering the phone. It's about creating these seamless interactions across all channels, and HGS is right there on the cutting edge.
Okay, so that's CX, and they've also been making some moves in cybersecurity, right? Even partnering with companies like Cranium.
Yeah, that's right.
What's behind that?
Well, cybersecurity is kind of the hot topic these days, and for good reason.
Makes sense.
Businesses are more vulnerable than ever to all these cyber attacks. They need someone to protect them, and HGS is smart to jump into this growing market.
Yeah.
By offering these really strong cybersecurity solutions, they can not only get new clients, but make those relationships with existing clients even stronger.
So it's about becoming that trusted partner.
That's it. Yeah, the one who can handle all aspects of their digital security.
It's almost like going from customer service provider to digital guardian.
Yeah, that's a good way to put it.
Yeah. Okay, and then on the other side, we've got their digital media arm, NXT Digital.
Right.
That's a whole different game, isn't it?
Oh, absolutely. The digital media world is like the Wild West.
Yeah.
So much competition, so much change happening all the time.
Crazy.
But HGS is jumping right in. They're making some bold moves, like they just acquired 7star, which is a big internet service provider based in Mumbai.
Yeah, that was a big deal.
It was. It really expanded their broadband reach.
What was the strategy behind that move?
It's all about building this digital ecosystem,
You okay?
a one-stop shop for all things digital. They want to offer customers a seamless experience, whether it's satellite, cable, broadband, you name it.
So it's not just being a cable company or an internet provider, it's being that ultimate digital companion.
Exactly.
Bundling it all together makes a lot of sense in this competitive market.
It does, and they're not afraid to try new things either.
Mm-hmm.
They're one business project which targets small and medium businesses with these specific broadband solutions. That shows they're thinking outside the box, looking for growth in new places.
So they're not just waiting for customers to come to them, they're going out and getting them.
Exactly. They're adapting to meet specific needs.
That's important. Got to be agile these days.
Yeah, absolutely. The world changes fast.
All right, so they're embracing technology, expanding their businesses, adapting to the market. It sounds like a good recipe for success.
Yeah, but there are always challenges.
Of course, no one has it easy.
Right. There are always those external factors, the competition.
Okay, let's start with the external stuff.
All right.
We've talked about global economic uncertainty, How big of a threat is that to their plans?
Well, it's definitely something to watch because when the economy slows down, people tend to spend less.
Yeah.
That can affect both their CX and digital media businesses. Businesses might cut back on outsourcing their customer service. People might cancel those subscriptions.
Yeah, it's a domino effect.
It is, and it can hit even the best companies.
So they're not immune, even with all their different businesses and plans?
Right. But they seem to be aware of those risks,
Okay, good.
and they're trying to do things to manage them, like strengthening their finances, getting a wider range of clients, being flexible.
Yeah,
That's all part of their plan.
makes sense. Okay, so what about competition? Who are they up against?
Well, in CX, they're going up against some giants.
Yeah.
Companies like Teleperformance, Concentrix, Genpact. Those are huge global companies with a lot of resources.
So HGS is kind of like David going up against Goliath.
Yeah, in a way,
Yeah.
but they've found their niche by focusing on specific industries
Mhm.
and using technology to their advantage.
Okay,
They're not trying to be everything to everyone. They're being strategic.
that's smart.
And then in digital media, it's a whole other battle.
Yeah.
They're facing those big cable and satellite companies, the streaming giants like Netflix and Disney, even telecom companies who are offering their own digital services.
It's a tough crowd.
It is very crowded and constantly changing.
So how does HGS stand out? What's their edge?
Well, one thing is their focus on these integrated digital delivery platforms.
Get
Offering that mix of satellite, cable, broadband, it's a complete package, everything you need.
Right, that digital lifestyle all in one place.
Exactly. And they're also going after specific groups, like those small and medium businesses with their one business project.
Yeah, we talked about that. It's about understanding what different customers need and giving them what they want.
That's it. They're playing a strategic game, watching the trends, finding the gaps, and always adapting.
It's a dance.
It is a balance between innovating and being agile.
Okay, so we've covered their growth, the competition, the challenges. What's your overall take? What does the future hold for HGS?
I think they've got a lot of potential.
Okay.
They're in markets that are growing, they've got a good track record of innovating, and they're not afraid to make big moves.
But there's also a lot of competition, and the economy is unpredictable.
That's true, so it's a bit of a wait-and-see situation.
All right, well, we've reached the end of our deep dive into HGS.
We have.
We covered a lot of ground.
We did.
Analyzed their performance, talked strategy, thought about the future.
It's been quite a journey.
It has. I feel like I just got an MBA.
Well, hopefully we've given our listeners a better understanding of this company.
Definitely a backstage pass to how it all works.
Yeah.
And that's what it's all about, right? Giving our listeners the information they need.
Actually, it's about empowering them to make their own decisions.
And as always, I like to leave our listeners with something to think about. So here it is. HGS is going all in on cybersecurity.
Right.
They know that protecting data is crucial in the digital world.
It is.
But how will this shape their future? Could this be their secret weapon?
That's a great question.
Right.
One that only time will answer, but one thing's for sure. As the world becomes more connected, the need for strong cybersecurity is only going to grow.
Yeah.
If HGS can become a leader in that space, it could really change the game for them.
Well, on that note, I think we'll wrap up this deep dive.
Sounds good.
Thanks for joining us.
Yeah, thanks for having me.
And until next time, stay curious.